Welcome to Disruptive Capitalists, the show where purpose-driven entrepreneurs and bold investors share how they're reshaping the world by investing time and money in a way that improves lives and creates wealth. So let's get to it. Hello, everyone. Thank you for joining us again for another great episode of the Disruptive Capitalists podcast. My guest today is the Ken G, who is the founder and managing member of KRI Partners, a real estate private equity and investor education firm. He has more than 26 years of real estate banking, private equity, and real estate investing experience. Throughout his career, he has been involved in transactions valued at more than $2 billion, which has included the acquisition, management, and financing of various multifamily real estate projects. Ken, thank you so much for joining the show.
Thanks for having me.
So you worked at Deloitte.
I did.
And I worked at Deloitte there for a short period of time. Why did you leave that monolithic structure and come into commercial real estate?
Yeah. So monolithic structure. I like that. So when I was a commercial lender for 5 years, went to Deloitte, wanted to be a CPA, got my CPA, did the tax thing for 7 years. But it was when I was there that my kids were really young, right? We got to rewind the clock like a long time. I had a lot more hair back then, no gray. And I used to do my daughter's 3 a.m. feeding. You have no gray. I used to do my daughter's 3 a.m. feeding. Well, a little bit down here, maybe.
Yeah. It's, hair club for men works.
There you go. So 3 a.m. feedings, right? I used to work 8 hours a week as a CPA, and I did my daughter's middle of the night feeding. She was obviously an infant. Awesome time, right? Father-daughter. I don't know if you have a daughter, but if you do, father-daughter time, man, it's nothing better than that. Yeah. Until I realized that, Ken, you're an idiot. It's 3 a.m. and this is the time you have with your kid because you're working too much. So I just got frustrated. I realized I did everything I was supposed to do, and now I just realized my whole family's going to grow up without me, and that just wasn't cool. The more 3 a.m. feedings I did, the more I realized, damn it, I am going to miss out on so much. And I said, you know what, I got to fix this. So 5 years as a lender, all my clients were in real estate, and I know how much money they make because I was their banker. Then at Deloitte, the Cleveland office of Deloitte had a massive real estate tax practice, like household names. You would know who these people are. Everybody around me is doing well in real estate. I said, man, I got to figure this out. So that's what I did. I spent a year and a half trying to figure it out. There was nothing available back then to learn. I mean, no programs like ours, no podcasts, nothing. So I got to go hang out at apartment association meetings, like not exactly fun, but I learned, bought 3 small deals, and in 3 years sold them, made $500,000 and realized, whoa, what just happened to me, right? The thought of having $500,000 in the bank at the same time was just insane. Not to mention the fact that I just made more money on the side than I had made the whole time up until that point at Deloitte. Yeah. Like, this I got to do.
Yeah, life-changing.
Completely life-changing.
When I first got started in real estate back in 2006, things were a lot different back then. A lot different. I was active duty military. I was making a solid $1,500 a month, I think. And a broker got me a loan on 2 houses to flip in San Antonio, Texas, while I lived in Idaho. You cannot do that anymore. You can't get a loan on home. Well, I was buying them at $50K a piece. So still could not pass the test
right
now. But back then, like you get all kinds of stuff. And we were buying them for 50 and selling them for 110 or 120. And
wow,
cool. We made it through the crash okay because we were still buying stuff at half price versus what everybody else was doing. Today, real estate's in a pickle. I mean, commercial real estate, a lot of it's lost 30-40% of its value. And a lot of investors have lost either all of it or a lot of it or some of it. And how has that been for you guys? You guys have quite a bit of real estate. How's that been for you guys so far?
We do. So remember, I lived through 08, 09. I mean, you started You started at actually a really tough time because everything was headed to the moon, and then it just literally fell off a cliff.
It did, yeah.
Kudos to you for making it through that. But going through that, and at the time we owned some apartments and we managed a whole bunch, I watched people fall left and right, and it was all 100% about debt. They perfectly good properties, full running. But the regulators told the bank, get it off your balance sheet. I don't care how good the customer is. I don't care. Get rid of it. So they foreclosed on it. I mean, it was just ridiculous. So I learned a lesson from that, and that was, man, you better use fixed rate debt. You better use a little leverage, and you better give yourself a long runway in case something happens because you don't know when it's going to happen. That lesson, that lesson was so massive to me. And then the next lesson I learned was you've got to be really, really disciplined when you buy. If there's not what I think is legitimate, $200 to $300 in rent upside on day one, and I'm getting a close even leverage, you can't do the deal. Now, fast forward, we bought in 21, and if we're able to raise rents a lot, we're fine.
Yeah,
we're fine. We've got properties that we bought in 21. We've raised $300, $400 a month rent, and they're fine. Why? Because cap rates go up, right? Interest rates go up, but I have money to pay for it.
Yeah.
Because I have new income that I didn't have before. So those people who just couldn't execute on that business plan, they're getting drilled. They're getting hammered because, their business plan was it just didn't work out quite the way they'd hoped. Whatever. Something went wrong, something went sideways, bad management. If you didn't execute, you're toast. And those properties that we did execute on, I mean, they're not home runs. I mean, they're just not. When you take a cap rate and move it from 4.5 to 6.5, I mean, that's massive change in value, massive. So you better have a whole hell of a lot of income to offset that, and that's how we're making it through. But there are people that not able to get that revenue, and when they can't grow income, you cannot absorb any increase in anything.
Yeah, I've seen guys lose 10, 20, $30 million of investor capital. Of course, there's the big ones like Tides and others who lost hundreds of millions of dollars worth of investor capital. And people are like, well, you can't lose money in real estate. Well, you can. This is how it works. So, yeah, you absolutely can.
Yes, you can. I've watched plenty of people lose money. Yeah.
Yeah. And it's like if you buy something at 70% leverage and the market drops by 40%, you just lost 100% of your investors' capital, and you owe the bank 10%. And number one rule, which you just described, is cash flow. Like if you have money, if you're cash flow positive, you're fine. You can live. If you're cash flow negative and you just lost all your investor capital, and you can't, you're on a variable rate note, so your debt went from $70,000 a month to $140,000 a month. You're toast. You're toast.
Yeah. And then guys like me will come and buy the property.
Yeah. Well, or from the bank or whatever, and that's it.
Yeah.
A good friend of mine said, I don't invest with any operator who hasn't been in the game for at least 2 cycles, because it takes 1 to learn the lesson and 2 to prove that it worked.
It's very good advice.
Very good advice. So you learned the lesson in 2000, and then you executed it in 2020 or 2009, 8-9, and then you executed it here, and it proved successful, right?
Yeah.
Brilliant.
That's exactly how it works. Yep. You just have to. It's the discipline. What gets people in trouble? It's FOMO.
Yeah.
Right. I have this saying: FOMO is a fatal disease. Literally fatal. There's no vaccine. Well, there is. But if you get it, you're toast. You cannot get rid of it. There's no cure, because once you got FOMO, got the deal, you can't get out of it. So FOMO kills a lot of people. That's usually what it is. They just, I don't know. It's really hard, though. I mean, I get it, because we get a lot of pressure. We raise money in advance. So we're blind pool funds, and we raise the money in advance. Well, investors are breathing down your neck. When are you going to deploy? This is ridiculous, blah, blah, blah. And we'll recommend that people have their money back rather than force me to buy deals just because they want their money deployed. I can't just do it, right? So that's really hard. I'm just telling you, that's a lot of weight on your shoulders. And they're annoyed. They want their capital deployed, and I always tell them up front, guys, you got to exercise one thing with us, and that's patience. And if you don't have it, we're probably not right for you, because I don't want to lose your money. And I'm going to be slow, and I'm going to probably pass on deals that you think I shouldn't, but I'm doing my best to make good decisions. Because guess who's the biggest investor in my fund? Me.
You.
I don't like losing my own money either.
Yeah. That's a very sage advice. And I remember in 2021, we bought a bunch before, like at the end of 2020, when everything was dirt cheap. Like we were buying stuff for 50% off, 60% off. And our mistake was we didn't sell in 2021 when everything had doubled. We're like, no, we want to execute the business plan. We want to, and we should have sold the whole portfolio a year later. Yeah.
I've made that mistake. Yeah.
Hindsight's always 2020, right? You're like, oh, well, I should have done this. But I think about this, and I think about investors who shouldn't, but they do. They put all their life savings into real estate. They put they put a lot of trust in that operator. One operator. Yeah.
Don't do that. Yeah.
I agree. And so
we tell investors all the time, if you've got $500,000, please don't give it all to us.
Yeah.
And people are like, what the hell's the matter with you? Of course, no. I mean, I don't have a crystal ball. I don't know what's going to happen. And don't put it all with one person. Put it with 3 or 4. I want you. I always tell our investors, I don't want you going to bed at night with investor remorse. I want you to go to bed at night thinking, God damn it, I knew I should have done more, right? That you can live with that emotion. The other one, it's really hard to get through.
And I find that if you lose your money in the stock market, it's almost like you knew it was going to happen or it could happen, you know?
Yeah.
But if you lose money in real estate, if you lost $1 million in the stock market, you're going to be angry at yourself. You lose $10,000 in real estate, you're angry at the operator. And it's a very interesting social dynamic that I've learned over the years and seen is very interesting.
That's really interesting that you brought that up, because I think about this a lot. I think we are programmed that we're going to lose money in the stock market. We just know it's going to happen. Just you go in, know it's going to happen. And you're right. To lose $1 million versus 10,000 in real estate, you're like, oh my gosh, you just ruined my entire life. Like, whoa, first of all, we haven't lost $10,000 of investor money. But the point is, that's exactly how they are. And it's really interesting, because the reality of it is that 10 grand will get made back 10 times over, right? It's just not every deal is going to nail it. It's not possible. Here's what I remind everybody. Do we all agree that Warren Buffett is a pretty good investor? Probably. He will stand on that stage and he will tell you they make mistake after mistake and they lose money. They're not perfect. If he is not perfect, how can you expect somebody like us or you or anybody? Yeah. How can you expect perfection? You're just never going to.
I think he lost $500 million on a single deal, on one deal. Like the guy's lost a lot of money, but it's just interesting. I've seen.
It's interesting how people approach that, isn't it?
It is, and we're told all the time, stock market's the best place to put your money. Put your money in an index fund, whatever. And if you lose it, it's okay. It'll just let it sit for 50 years, and it'll double. And you're like, I don't know if I like this math, but anyhow, it's just interesting. So I love the psychology of money. The psychology of money is very interesting. There's a book called The Psychology of Money that was actually pretty good. And I love real estate. I'm very interested. So investors are coming to you today. Are you still buying right now?
Oh yeah, we're trying to buy everything we can find.
Yeah,
higher quality assets. Right now, the institutions aren't in the game. We like new stuff. We're the last 2 deals were in the high 5s cap rates in great areas in Florida. Brand new stuff.
So you're You're buying it from the developer, or you're buying it from?
We did it. Yeah, in both cases. Yeah, we bought from the developers. Yeah.
Okay.
Yeah, they have to stabilize. Yeah, they have to stabilize.
Okay.
But you can get really high quality assets at almost a 6 cap in Florida. Like, how could you not do that?
Yeah.
You have to.
And for the listener, 6 cap capitalization rate. That's essentially a very low price for a very good product or an excellent product. So tell us a little bit about your property management, because you got more than a couple of doors, from what I understand.
Yeah, so we manage ourselves. We've done third-party management in the past. In fact, collectively, our senior management teams probably managed 16,000 units. I mean, we've done a lot. And we stopped the third-party management. It's just it's brutal. I mean, it's
brutal.
Well, it's brutal. It's a no-win scenario. There's no upside for me, right? You just get beat up. I always tell people, you can do 99. It's a lot like being a CPA doing a tax return, right? You can do 99 things right, 99,000 things right, but that one thing you didn't do right, you're talking about it for hours, right? That's not a fun way to do it. Just like doing a tax return. You can only do a good tax return. You're not going to do an amazing tax return. This never happens. So we got out of third-party management business because it's just too much, and we just manage our own stuff. And I mean, after 27 years, remember, you don't know this, but we grew up in Cleveland. The first 10 years of business, there's no property management in Cleveland. So we had to grow up learning how to manage. And so we have all of our SOPs in place. I mean, we've just fine-tuned this stuff. And the thought of trying to bring in a third-party manager, nobody's going to care as much as me. Number one. Nope. Number two, they probably haven't been doing it that long, and they probably don't have as well-established systems, right? And then the real problem with third-party is, and it doesn't happen all the time, so I'm not trying to diss all the third-party managers, but there becomes this information block because they're a vendor who doesn't want to get fired. So you're not finding out what's really going on, and that's a train wreck, in my opinion, because when you're making decisions based on bad information, because it's not, I don't want to say it's being withheld, but it's being managed, okay? What you hear is being managed, that's a problem. You're going to make bad decisions as the owner.
And
that's why we self-manage.
It's natural, right? If you're working for somebody, you naturally don't want to come and deliver all the bad news. You just want to come deliver good news, and a little bit of bad news every once in a while, but mostly good news. And it's
yeah.
I mean, they're trying to make money.
In management, you've got either you're fighting with a third-party manager, or you're managing your own people. Like you're fighting the same battles. In my mind, I'm like, I don't understand why you wouldn't just manage it, because people don't want to learn. And the other thing I will tell you, if you talk to investors, if you understand how to execute, I mean, this is the part that absolutely floors me. You name me another business that you're going to buy, and then you're going to turn over 100% of the operations to somebody else, just get monthly reports, and then sell it and expect to make money. Real estate's the only one.
Yeah.
I don't know of another one.
There were a lot of syndicators because we managed our own properties, and then at one point we turned over some to third parties because we were like, kind of losing money on this thing. And we went from being profitable at a big property in Dallas, Fort Worth, handed over to one of the top PMs in the country. And that thing went from cash flow positive to cash flow negative really quickly every month, really quickly. And our institutional partner, I mean, I don't know, 2 years of me saying, can we fire them? We're going to fire them. Can we fire them? Let's fire them. And they're just like, no, they're best in the country. So we finally just fired them.
Why are we losing money if there's no
Why are we losing money? Because I'm pretty sure they're red and I'm forking money out every month for this thing. So we fired them. We hired somebody else. And like when we were managing it, we were cash flow positive, way negative. And now we just got new ones and already, It's like, there are good ones out there. There are great ones out there.
Yeah.
But inevitably, you said it, nobody cares more about that property than you do. Nobody cares more about those residents than you do. And so when we managed it, we took care of our residents. It was collections were in the 90s on a Class C property. We decreased crime by 75%. The city came to us, was like, what are you guys doing? There's no mall cops driving around. There's no security guards. There's no gate. There's no cameras. We're like, no, we just treat our people really well. And if they're bad, we kick them out. Like, it's just really that easy. You just treat them really well, take care of them. They struggle with their rent, connect them with a nonprofit that take care of them. They know we got their back. They got our back. We're good.
Yep.
And it works.
Follow the system.
Follow the system. So you guys do primarily Class A properties.
Yeah, I mean, we have done C, right? What happens when you probably know this. You start off with a heavy value add, making money, right? Then at some point in your life, you flip to creating wealth. And that's when you start buying higher quality assets in better neighborhoods that you can hold longer term. That's where we're at. And honestly, investors would prefer to invest in something they're not embarrassed of, right? Yeah. They don't want to go to the party and say, oh, yeah, no, I'm not going to show you a picture of the one I invested in because it's butt ugly. They want to say, here it is. Look at it. This thing is gorgeous. Oh, my gosh, you invested in that? Wow. There's a lot of that going on. It's so much easier to raise money for nicer properties. It just is. And,
it is.
And when the rubber meets the road, when things get tight, I mean, the best product's always going to do the best.
Yeah.
That's just the way it is.
It is. And you have less pipes exploding in the middle of your property.
Yeah, you've run a few properties, I can tell. Yes. Yeah. In Florida, we jackhammer through the floor to fix the cast iron pipe that rotted out. Yes.
Yeah. It's like, did you put that $1 million worth of plumbing work underground in the pro forma? No. Well, you should have, because it's a 1960s property. You're going to be spending some money. So a lot of things that's on a lot of people's minds right now is people are struggling, right? There's recession word is getting tossed around a lot. We just had this conversation today about, who's helping these people get access to resources they need if they lose their jobs and everything else. Now, what we've done in the past is we always had a book with, here's the 50 different people you have to call in town to get access.
We call it the KRI Survival Guide. We have the same thing.
Yeah, same thing. Okay. So is that what you're using right now? And how are you seeing, what are you guys seeing in your resident mix?
Yeah, believe it or not, we're not. I mean, it depends on what market we're in, but most people are not losing their jobs. Most people are doing okay, and if they do have problems, we counsel. We try to get them early, right? So many managers think, oh, I'm going to work with them for 3 or 4 months. Well, if you do that, the number is so big they can't recover. I mean, you are not doing them any favors.
Yeah.
Get it early, make it manageable. And so that's what we do. I mean, you got to be a human being, right? You got to be a caring human being. You just have to. I mean, you're dealing with people's homes. Having said that, though, I mean, if you can't pay, you do got to go. We're just going to do our best to say, hey, let us work with you. Let us help you. Let us, maybe you need to go down a class in terms of the property, right? Maybe you can't afford $1,800 a month. It should be $1,200. Okay, let's get you in a place where you need to be. We'll even let people out of leases, because I mean, they're going to go anyway. I mean, why would you torture someone?
Yeah, you just sat on them with a bunch of debt, and then you're going to get collectors calling them that aren't going to get any money out of them, and it just ruins doesn't ruin their life, but it hurts them, and it's pointless. Yeah. I mean, the biggest thing that happens in Florida, and this happens a lot, especially when rents were going up pretty quickly, is the whole entire area has changed, where people had to leave the area to afford to rent. They literally went, and you watch Florida, that happens a lot with growing markets. Here is, they want to be here, the prices go up, well, then they just have to go next door. And they just keep kind of getting pushed around. It's really it bums me out to watch it happen, but I've seen it happen many, many times. And there's usually always a cheaper place to live, right? Usually. And usually not so bad, especially in Florida. I mean, there's a lot, everybody thinks of Florida as the major cities, but there's a lot of small towns in Florida where you can live very, very affordably.
Yeah. And that's what actually happens most of the time.
Yeah. It's a natural, it's a natural process, right?
It is.
We talked about this a little bit before. I don't know what I'm going to eat for dinner tomorrow. I don't know anything about the future.
Okay.
But what do you see with real estate market? I mean, what are you seeing, or what are you thinking is going to happen in the next couple of years?
So we're talking about multifamily, right?
Yeah, multifamily, sir.
Yeah, multifamily. I think rates are going to come down. I think if not, the administration will go crazy because somehow, some way, the real estate guy at the top knows we need lower rates. It doesn't matter whether you like the guy or not. He understands real estate, and he's going to want low rates. He's not going to stop until that happens. So that will help a lot of people. Right now, there's very low deal flow. It's because the people that don't want to sell don't have to sell. And they're not going to sell when cap rates are high. The only thing that's trading is things that are, in distress. I don't mean physically. I mean, usually it's debt, right? Developers, variable rate loan, started at 4, and they can't afford 8. They got to sell it. They got to fill it and sell it, right? That's what's going on. I think there's going to be a lot of stuff on the market. Here's the thing that is going to impact real estate the most. You said it earlier. A lot of investors have lost a lot of money. Therefore, they're vetting their sponsors the way they always should have.
Yeah.
It's just before they got FOMO. They caught that disease, and they just threw caution to the wind and invest, rather than saying, okay, wait a minute, let's find some experience here, right? Because 4 or 5 years ago, if you had a heartbeat, you were going to make money in real estate really quickly. That's what everybody believed. So it didn't matter who you invested with. So that's the biggest change now. And so it actually helps a firm like ours. I mean, we've been around almost 30 years. We've been doing this for a long time. So, we check all those experience boxes and all that. And it's really hard on new people trying to get into the business to do what we do, because now those investors are like, nah, I've seen this movie before. I don't want to watch it again. Right? Yeah. I'm just telling you, that's what's going on. So we will get great deals, I believe. And at some point here, the institutions, after they're done dealing with their mess, which they're close, they're going to start buying. And when they start buying, then everything explodes again, because they drive down cap rates, because they don't have the same capital stack that I do. And then everybody's off to the races.
Yeah, they're fine with 6% annualized return. They don't need a big return. And they've got, like you said at the very beginning, investors pressuring them. Their people aren't pressuring them to deploy capital. So they have to deploy capital.
Yeah, the other thing that you have to, the other thing that comes along with deploying capital in institutions, fees.
That's how they make money.
They live off the fees. They don't need the appreciation carry interest, right? They they want it, but they need to acquire assets. They just have to. It's a machine, and it's very hungry.
It's a very hungry machine, yeah.
It is, yep. So I think that's going to happen. We're hoping to accumulate as much as we can before the machine gets hungry again, because they just make it hard for us to buy, because now we're competing with them.
Yeah, and we saw that. Yeah, 21 was a wild year of real estate.
It was.
So,
I still remember, rates will not go up. We will not raise interest rates. Whew.
I remember getting into an argument with some partners, Harvard guys. This is end of 21, and we're closing with our lender. And I said, look, we got to get a rate cap. Rates are never going to, we should get a rate cap. No, it's $500,000. We don't need a rate cap. Rates have never gone up over 2 points, 200% in a year. We're only going to have this for 2 years, and then we're refinancing it to HUD and blah, blah, blah. I'm like, guys, we got to get a rate cap. I didn't go to Harvard, but I'm telling you, rate cap. We need a rate cap. $500K, let's spend it. And guess who didn't get a rate cap? We didn't get a rate cap. And so
that was rough.
We saw the property, we made all the payments, but we made all the payments. And so experience.
I will tell you, I had a small loan I bought a rate cap on, 40 grand. I refinanced it 11 months later because I just saw what was going to happen. I put we moved income very, very quickly at that property. We put 7-year Fannie debt on it. We sold that rate cap for $420,000. We bought it for 40 and sold it for 420. That's how fast rates move. That's crazy.
It's 525%. It was the fastest rate hike ever in U.S. history. I don't know why people don't talk about that.
Nobody can plan for that. And that's the sad part. Nobody can plan for that. No, you just have to hope and pray that the debt you have in place is just timed out correctly. Nobody puts an exit cap rate 500 basis points higher than they go in at.
No. I remember watching people were saying, we have enough room comfortably to go up, over the cap, interest rates can go over 100% up, or 100 points up.
Yeah, okay? I remember.
Yeah. Times that by 5. See. Yeah. Your payments all just doubled. No deal, and you just got blown out of the water. So you can blame operators to a certain extent, and then to another extent, like the Feds really try to kill everybody. So.
It is very much a perfect storm. A lot. Yeah. And now what we see throughout Florida is the C properties are getting hit with immigration challenges. Yeah. Because they're leaving. They're leaving. They're leaving. They're not even illegal. They're just leaving because they're scared to death. Doesn't matter what's really happening, but that's a real issue. I mean, you can't hide it. It is a real issue for C properties. A properties aren't really having those kind of problems, but the C's are.
Our C's are. Like we were at 90-something%, and all of a sudden folks are leaving. And when you got on the news saying that if you're Hispanic, you're getting shipped out of the country, like whether or not you're legal or not. Yeah,
that would scare me.
Like ethnic cleansing.
All you got to say to me, and I'm out. I'm gone.
Yeah, it's like, all right.
So that is the biggest issue. I think that's a temporary. Well, that'll go away. That'll slow down. That'll stop because all the ones that are going to leave will have left, and then we just backfill it. That's what's happening. But it's a challenge. So now, just think about that. Higher interest rates, the immigration issue, recession concerns. Those are all, you think about this. Warren Buffett tells you to run into the fire. Don't run out. And if you can, and you have enough kahunas, run into the fire, because I'm telling you, I watched the people that bought in 2011, and they made a freaking killing. They just destroyed. Because they ran into the fire. Remember, 11 was a fire. It was a
fire,
dumpster fire.
But it was a great time to buy. And right now, you can pick properties up for 30, 40% off, 50% off their values. It's not your fault that it's there, but and there's government-backed deals, there's grants, there's all kinds of stuff. We're still trying to do deals. It's just taking a very long time to close. Because everybody's skittish.
Yeah. You're not wrong. But pick up what you can, because I don't think you'll be sorry later.
Not at all. Ken, it's been really great talking to you on this call.
Thanks, man.
For new folks trying to get into real estate, which I see folks trying to do that right now, and I think you might want to try something different because it's very, very, very hard to raise capital right now. And if you don't have any credentials at all, it's going to be a giant challenge for you. You might consider tech or AI. Everyone's coming out with a new software.
Right.
30 minutes because you can buy code and do all sorts of things. But what advice would you give for the new gal or guy who's trying to get into commercial real estate right now?
Yeah, you need to take advantage. There are a number of programs out there where you can legitimately learn from people who have been doing it for a long time. But here's something that we do. We're just went under contract for a deal. I'm the controlling partner, but 5 of the people in our education program are partners. That's how they're going to get their first deal. We call it our partnership program. We don't partner with just anybody, but my point is you need that experience. right? Because the lender will accept it, your investors will welcome it. It's how you get started, because I'm pretty sure you and I know, if we can help you get your first deal, everything else changes for you.
Yep.
Even though it shouldn't be so dramatic, but you close that deal, all of a sudden you're real, the brokers call you, they actually care about you, you are the real deal. So all I try to do is help people get that first deal. And that's my advice to them. Find that kind of a situation. And if it's not me, that's fine. But find an experienced mentor. Find someone. You got to find someone with that experience box to lead you through it, because you're probably not going to get awarded the deal if you don't have it. Even if you do get awarded the deal, the lender is not going to really like you, because they know you don't know what you're doing yet. And yes, it is really hard to raise money for people now who don't know what they're doing, as it always should have been, but people got FOMO.
Yeah, and we got a 30% IRR. How long have you been in business? Well, we started buying in 2021 and we sold in 21. Like, 30% IRR. Huh? Yeah. Anyways, all you had to do was.
But that's my advice. That's my advice. There's a lot of people who want to help people.
There are.
I know you do.
Yeah.
I know you do. And because see, my kids are grown now, right? I did my daughter's seed. Now she's grown and gone. I don't get to affect anybody else's life except I terrorize my wife, right? So now I realize that I can actually help other people get the kind of life that I've had. And that's really rewarding. I know that sounds geeky, but that's true. That's the way it is.
That's life's, man's search for meaning. Viktor Frankl. When we make a difference in other people's lives, it changes our hearts. It makes more impact to us than a shiny car or shiny watch or anything else like that. Do
you want to know the real unexpected benefit? I never saw this coming. When your daughter looks at you and says, wow, I'm proud of what my dad does. Think about that for a minute. You said you had a daughter. Think about that. Your daughter or your kids are like proud of what you do for other people. Think about that. I never saw that coming. Then it hit me. I was like, whoa, wow, I did not really understand that. But see, we get even geekier as we get older. But that's a big deal. That's a big deal, right? You don't want your kids to be embarrassed of what you do.
No. My dad takes advantage of people for a living, Yeah, I know your dad. We did a business deal and it was terrible.
You don't want that.
You don't want that. No. Ken, thank you for caring. Thank you for giving back. Thank you for doing good in the world and being a disruptive capitalist and making a difference. And if folks are interested in learning from you and seeing what that sage wisdom and advice of multiple cycles and understanding the actual business plan that works, not the one that, the sage on the stage kind of guy, but the real one that works over 30 years, and they want to learn from you, how do they get a hold of you?
Yeah, just go to kripartners.com, kripartners.com. When you go there, you're going to either go left and that's the side where you maybe want to learn to do your own deals, or you're going to go right and be passive, invest in one of our funds. What most people do, they do both. I always thought education students would go to the passive side. They do that. Here's what's interesting. The passive investors go to the education side because they want to understand their investment better. Very cool. I never saw that coming. So anyway, go to kripartners.com. Check us out. We've got a ton of free stuff on our website to help you start to figure it out. I can't give you everything for free, but at least you can get a really good head start and see what it's all about, and then reach out to our team.
That's fantastic. I mean, Warren Buffett was like, invest in what you know, like go study and understand it and then invest in it. I 100% agree. You can lose all your money in real estate. So go and learn from somebody like Ken, partner with somebody like Ken. That is the best way to get started. You nailed it. it's the best way to get started is to partner with somebody who is very experienced and not trying to take advantage of you. Yeah, wonderful. Well, thank you so much. I'll make sure those links are in the show notes. Thank you for being on our show. Any last words for our audience?
No, thanks for having me. And look, if this is something that you want to do, just roll up your sleeves and do the work, because I'm telling you, there is not a human being around that can't do what we do.
Yeah,
that's what I believe.
Agreed. Thank you very much, Ken. Thanks for being on the show.
If this episode shifted your thinking, then share it with someone bold. And remember, capital is a tool. Use it to build a world you are proud to live in.